Well, it seems like the hot vac summer is also going to mean a hot hard seltzer summer. We are still seeing rapid growth in that category. So let's talk about who may be the big winners there. Laurent Grandet is joining us now. He's a managing director and lead consumer staples research analyst at Guggenheim Partners. Laurent, it's good to see you. So according to your research that you've been doing, what are the most popular drinks in the category right now, and what's the capacity and the potential throughout this summer?
Yeah, so right now, White Claw is still the leading brand in seltzer, but they are kind of going down in terms of market share. The leading kind of the brand that is clearly the hottest right now is Truly, as they have been launching what we call bolder flavors, like lemonade a year ago, tea at the beginning of the year, and more recently punch. So we think Truly will catch up on White Claw, closing the gap. Not entirely, but breaching the 30% market share this year, this summer. And White Claw will likely go down in a higher 30s. But White Claw first, Truly second, but really Truly is the hot brand right now.
Laurent, all these new hard seltzers and now even increasingly hard teas, is that coming at the expense of certain areas of the beer market?
Yeah, so we did a big piece of work about that we published about 3 weeks ago, what we call at Guggenheim a 360 deep dive. And what we are seeing is that about 60% of the seltzer consumption is coming from beer, and about half of that is coming from light beer, and the rest are more craft and imports. But yes, 60% is coming from beer. About 10% coming from spirits, about 15% from white wine mostly, and the rest is really more incremental.
Laurent, if you go back in time 10, 15 years, it was all about how are these big beer companies going to deal with the craft trend. As you think about craft's position within consumption, has that grown? Has that trend faded? Is seltzer replacing it? I know you mentioned that a lot of this comes from light beer consumption is going to seltzer, but what is the state of these craft investments, which have been sizable for so many of these major spirits makers?
Yeah, so it's interesting because in craft, you could look at the business in different ways. If you include the big craft brands like Blue Moon or Sam Adams only, the craft beer in retail has been growing. Now, what is interesting is that most of the craft beer were sold in tap rooms and on premise, and those were closed. So you had a lot of smaller regional brands that just disappeared. They didn't have the financial backbone to stay. So what we are seeing now in retail is actually all those smaller craft beer are disappearing, and the shelf space is offered to seltzer. So craft seems to be doing well in retail, but it's really driven by Blue Moon and Lagunitas and those brands that are, probably not as crafty as you would consider. One thing that I think is interesting to note here is craft came with lots of flavor, but also, usually a higher ABV, alcohol content, which kind of reduce the ability for drinkers to drink as much probably as they were doing before with light beer. Seltzer being just 5 degrees of alcohol in general. What we saw in our research is that consumers are inclined to drink more of those in one shot. So that's increase, if you want, the volume of beer, if you include seltzer into it, and for the first time for quite a long time. Craft, higher ABV, was not so much a factor of growth in terms of volume.
And Laurent, the new Topo Chico launch between Molson Coors and Coca-Cola, that seems to have gone off to a pretty strong start. Is Molson Coors the best hard seltzer stock to own for a hot vac summer?
Yeah, so 2 things. One of the reason why we explained the growth of bold flavors in seltzer is that 2 demographics didn't under the seltzer. It was African American and Hispanic, about 10% of household penetration last year, and with bold flavor. But now with Topo Chico, which is really an Hispanic brand, Those brands are reaching out and Hispanic. And Topo Chico, for example, reached about 35% of household penetration with Hispanic consumers last month. So we think it could be the number 3 and number 4 brands in the next few months. Now, is Molson Coors the best stock to own right now? It's the one with the most upside, but at the end of the day, Seltzer is still a small part of their overall business. We think that they will reach about 7% of market share this year with Topo Chico, Vizzy, and of course Seltzer plus proof point, which for them it's a good really factor to bounce back. It's a company that in the US was declining 1%, roughly pre-COVID, and we believe that we'll be growing about 2% post-COVID thanks to Seltzer, but also some premiumization they are doing. So in terms of upside, we like some as a growth investment, and we like Molson Coors. It's our best idea actually because it's still a value play and there is very little risk but lots of upside.
Laurent Grandet, cheers. Thanks so much for speaking with us about the hard seltzer market today. Appreciate it. Laurent is with Guggenheim Partners. Well, the crypto conference 2021 wrapped up over the weekend in Miami. Our Zack Guzman is back from there. A lot of antics happening over the course of the weekend, both at the conference proper and off-site. You had the chance to talk with some of the big players who were there as well.
Yeah, we sat down with Shark Tank's Kevin O'Leary, and he walked through some of the things. If you recall, back in May, on Yahoo Finance, he called out some of the sustainability concerns, and he called that absolutely right because a couple weeks later we saw Elon Musk reverse the position at Tesla in terms of accepting Bitcoin as a form of payment there, citing the same sustainability concerns. But now Kevin O'Leary says that he sees those concerns getting fixed in the next 12 to 18 months, and what was Bitcoin's biggest problem, he says, is now becoming its biggest opportunity. And as he sees it over the next decade, Bitcoin for sure will be outperforming the performance of the S&P 500. But here's what he had to say about all those ESG concerns and how he sees that battle shaping up.
It's both a huge problem and a massive opportunity. I prefer to look at the opportunity. So here's the setup. Here's what happened. I work with institutional clients and sovereign funds, pension plans. I'm constantly working with them on a lot of other projects that I'm involved in. I have investments in many, many different financial services companies. So I'm in a constant dialogue with them. And as the excitement, if you want to call it that, or the noise, as Bitcoin was passing through $55,000, $60,000, I started to ask these institutions, because I know their allocations, and most of them are 5% weighting in gold, for example. And I'm asking them, look, are you going to get into crypto? If it is crypto, what are you going to do? And what's the allocation going to be on a mandate basis? So let's say they're running $1 billion mandate. That's not uncommon for a sovereign fund. Here's what they said to me over and over and over again. We would love to put a 1 to 3% weighting into Bitcoin. But the only one we're interested in is Bitcoin as a property, not as a currency. So the same as buying land or a building. However, we are now subject to ESG committees and compliance committees that are involved in things like, ethics, human rights, all that. And the asset has to get filtered through both compliance and ethics committees. Then we can allocate. I said, so what's the problem? They said, huge problem. ESG on Bitcoin. The majority of it is mined using non-sustainable forms of energy, primarily coal. For many of the miners that started the journey in Bitcoin, 17, 18 years ago. I had not heard that before. And I started hearing it every day. And I called it out on that Yahoo Finance interview, and the proverbial poo-poo hit the fan. I took a lot of flack, but it's obviously on the mind of the institutional client.
When it comes to that, though, obviously there are sustainable miners out there. You can use cleaner energies if you want and shift away from coal. And we are seeing that, even the way that China's had its, mining sector completely changed with regulations over there. So, is that enough maybe to change it? And are you seeing kinds of the things that you would want to see to fix those solutions now?
I decided to reach out to some of the large holders and say, look, you're aware of this problem. So I called up Tyler Winklevoss and said, look, what do you think? He said, we know this is a problem. We got it. Why don't you give a call to Steve Lee? Let's talk to them. What about Fred over at Coinbase? So we started to get this dialogue going about how do we solve this problem? Because here's what we're thinking. Yes, it's a problem, but think of the opportunity. If we could blow through the log jam, solve this problem for the institutions, that's $1 trillion worth of buying power right there. So if you want to see Bitcoin achieve 100,000, 200,000, 250,000, $1 million a coin, you got to have the institutional player. Everybody in this hall today is incentivized to solve this ESG problem. Everybody, every single person, for that singular reason alone. The question is how. Now, there are two sort of thought streams on this. One is to tag coins, green, not green. And a lot of people don't like that because then the currency is not fungible if you're trading as a currency. You make one coin, different than another, that's a problem. The other is to somehow decide as an investor you're going to buy a sustainable miner that's using hydro or using solar or maybe, an energy source like wind that you can say is completely sustainable, and just buy that miner and hold the coins on the balance sheet in perpetuity, which seems to be of great interest to sovereign funds.
Yeah.
So I'm going in two directions. I'm trying to get a software solution so that we can tag, for example, Hut 8. Jamie has all her coin on her balance sheet. Every single coin she's ever mined, all sustainable. Well, she's a sustainable coin, even though it's, nobody cared about that 2 years ago.
Yeah.
Why not somehow give an identification to that coin so at least it's sustainable in one way or another? So the industry is trying to solve the problem. I'm trying to be part of the solution. I'm an investor, but I know with certainty I cannot own coin that was not mined sustainable.
Have you tapped deals with any sustainable miners out there? Because we talked with Bitfarms, one of those Canadian operations that use hydropower. There's a few others that are really focused on it, but are there ones you specifically like?
There are 3 private miners that I'm in discussions with that are looking for capital to build out wind and solar. Of course I'm interested in that. And they're one of them's in West Texas, there's another one in a different geography in a different country, one in Europe. My strategy there is to simply say, look, okay, what do you need? I'll be an investor. Let's say I end up with a third of the company or something. I want to be paid back in coin. I don't want fiat. I'm an investor. I want a distribution in coin, and I'll know with certainty that that coin was mined sustainably, and I'll never sell it. It'll be just property.
That is the tricky thing too, though, because you're right. I mean, it's all fungible, so it should be, it doesn't matter. You can't track it. It says Bitcoin is Bitcoin.
Yeah.
Of course, though, if you're talking about prominence and where the coin's coming from and the problems there,
well,
we were talking with Tim Draper yesterday, and
yes,
his connection with Bitcoin that he won through the Silk Road auction from U.S. Marshals, and I mean, you could say the same thing with cash, right? I mean, there's dirty cash, clean cash, and it's tough.
But
tough to separate.
at the end of the day, there's a new sheriff in town, and it's called ESG. Every single institution, including from Larry Fink on down at BlackRock, who put out his ESG letter, his sustainability mandate, this used to be fringe. It's not fringe anymore. You have to be sustainable in terms of how you look at investing, or you're going to lose your investor. And you're going to be, someone's going to point a finger at you and say, look, you don't seem to give a damn about sustainability. I do give a damn. I mean, everything I touch is sustainable investing because the entire employee base that I have, I've probably got 10,000 employees through my supply chain of the companies I own. I bet you 90% of them are under 35 years old and really care about this issue. And if they thought that I wasn't on board with this, they wouldn't be my employees. Everybody that works for me knows that I care about this because I was one of the first graduates of environmental studies, the first cohort ever. Yeah. And when people didn't care, I care. I think we will solve the ESG issue on Bitcoin in the next 12 to 18 months. And I think over the next 10 years, the Bitcoin asset itself will beat the S&P. So if you're thinking about a 7 to 8% average over a decade on the S&P, I think Bitcoin would be 300-400 basis points over that. I really do. I just think that the minute we solve the institutional ESG issue, Katie, bar the doors. Because people don't understand the majority of the world's investments are in the institution and the sovereign fund. I mean, that's where the real money is. And that, for this conference, is the real opportunity.
Yes, I mean, we're hearing, we obviously saw kind of the impact of Elon Musk tweeting about some of those sustainability concerns in May, and we saw Bitcoin's price collapsed about 30% in what was the toughest month in the last decade. But you're just hearing from Kevin O'Leary there talking about his optimism that it does get solved. And guys, I mean, as far as a price call goes, maybe not the boldest one to say that it's going to outperform the S&P 500 return by about 400 basis points over the next decade. But I mean, this was a guy who called some of these price jitters here back in the beginning of May. So now changing his tune to say that some of those problems will get solved in the short term here.
Well, look, Zack, as he said, he talks to institutions and speaking their language is how many basis points you'll outperform the S&P 500 by. And Zack, I know you got a whole show coming up and viewers can find out all about Bitcoin Conference 2021 then, but I just want to ask you what the vibe was like. You spent 3 days down there. I was exhausted just following it online. I wasn't even paying attention all that closely. What kind of was the energy down there for this event?
It was wild, and I mean it was wild in a lot of different degrees. You got the fact that you had people there waiting for hours to get in, not just the first day but also the second day. You had shenanigans on stage. You had Jack Dorsey kind of getting defended there from one protester who had come up and almost made it on the stage. And then you had people who were repping Dogecoin there who did make it onto the stage and interrupted a panel there. Overall, though, I mean, you talk to people who were on the ground there who paid money to get into this conference, and generally the takeaway from the people I talked to was that it was a massive success in terms of the way that there was some substantive conversations there being had, and a lot going back to, some of this adoption cycle, the things that we've been talking about. And you had El Salvador coming out saying they're going to be accepting it as legal tender, kind of the celebration at the end of the conference, but a lot of real progress being made when you step back and look at where we're at right now. And we're going to be chatting with Mike Novogratz, or at least showing that interview as well, hitting on the same themes when it comes to institutions getting more and more comfortable with the idea of putting more money to work in Bitcoin. And that might be a bigger thing to focus in on rather than some of the shenanigans that took place there on stage. But overall, a wild time down in Miami, enjoyed by all.
I'm shocked that they said it was a massive success. Zack Guzman, thanks so much for your coverage down there. Really good stuff.
Welcome back. We have more from Bitcoin 2021 down in Miami, this time in an exclusive sit-down with Galaxy Digital CEO Mike Novogratz, one of those voices increasingly turned to as an expert in this space as he stacked billions of dollars through Galaxy Digital, the company that he runs and says an ecosystem company around all the opportunities in crypto. A fair comparison to make between him and Warren Buffett when it comes to the way that he's been investing in the space. I asked him if it's fair to call him officially the Warren Buffett of crypto and what he sees when it comes to institutional money being that driver to bring us back to those highs we saw above $60,000. Here's what he says we should be watching for in the next couple of months. Take a listen.
Well, listen, first of all, sustainability is a big issue for the whole planet, not just for the crypto industry or the Bitcoin mining industry. And when we look at it in context, I think our community needs to do something just like every other community does. Traditional banking, YouTube uses 2.5% of all electricity. That's a crazy statistic. YouTube, we're not going to ban YouTube. YouTube is awesome. I will literally bow down at the altar of YouTube, right? There's unbelievable utility from it. There's also unbelievable utility from the Bitcoin blockchain. It costs a lot to mine. It uses a lot of electricity because it was designed that way. If we want something to secure trillions of dollars of wealth, you don't want a guy with a pop gun, right? You want a robust system. And so I think it's inherent on the communities, the community needs to be responsible to move our industry, like all industries, towards a greener future. And I think you're going to see all kinds of initiatives come out soon.
All weekend, I've been hyping you up as the Warren Buffett of crypto, which is ironic because we all know his take on crypto. But you're involved in so many different areas. I don't know if it's a fair comparison.
Well, I am the oldest guy in crypto, and so maybe, Warren is maybe the oldest guy in traditionally, Charlie Munger. Listen, we decided at Galaxy that we wanted to be an ecosystem company. And the thesis was, let's take our own money. It started as my family office, and it's now a public company. Our own money, invest in the coolest projects, the cutting edge technologies, in coins, in custody solutions, you name it, we're trying to invest in it. And we want to take the understanding we learn and then transmit that to our clients. Our clients from the investment banking division, our asset management division, our sales and trading clients. And so what I found is everybody who enters this space goes on a similar journey. They start with Bitcoin and say, whoa, this is pretty cool. And they might have different opinions. Is it going to be digital gold or decentralized money? And then they're like, well, what's that Ethereum thing? And as they go down this path of understanding how this ecosystem lays out, we couldn't have NFTs without Satoshi. Like, a lot of the artists don't think they're Bitcoiners. They are. Everyone's a Bitcoiner in this whole ecosystem because Satoshi's white paper gave us this brilliant, kind of one-sentence takeaway. It was the first digital signature you couldn't counterfeit.
Yeah, it was a spark that kind of lit the whole fire there, and it's an on-ramp for a lot of different technologies.
Yeah.
But you similarly, I guess, have built Galaxy as the on-ramp for a lot of institutions, and you're also kind of in the way that this billion-dollar deal, more than $1 billion deal with BitGo really increases your guys' connections with some of those more established investors. I mean, talk to me about how that changes the landscape, because some people might say that we got to 60,000 in Bitcoin or above it because of institutional money coming in. How important is it?
Institutional money is wildly important. So let me give you some numbers. Total crypto market cap, that's Bitcoin and everything else, is about $1.5 trillion. That's 30 basis points of total global wealth. 30 basis points, nothing. Listen, for that to shift to 2%, 3%, which I'm fundamentally in belief that it will, you need institutions. They own all the money. And so Bitcoin is still a 95+% retail dominated ecosystem. Maybe a little less, maybe 90%. But as institutions are slowly moving in, they take time. They don't wake up one night and say, buy me 3 yards of Bitcoin. I mean, unless they're Elon, right? They put a little in. They do the same thing everyone else has done in this thing. They put something on the board, so they start understanding it more. Then they get more confidence. And what you'll see is higher prices beget more people entering the market.
Yeah, it sounds like we're kind of stuck now in this $35,000 range when it comes to that, and some people might point to the ESG concerns that institutional investors have as maybe a problem to get back to where we were before. I mean, do you see that playing out, or how big of an issue is it?
What happens in markets is you get a new group of investors that come in, they get excited, and then they push the market higher. So if you think about when Paul Tudor Jones bought Bitcoin, and he famously published that paper, I think Bitcoin is about $8,000 or $9,000. A lot of hedge funds got into that zone. Well, a year later, it's at $60,000. The urge to ring the cash register is such a deep-seated human urge that's what happens. People made a lot of money in something, they sell some. They sell some to buy a house, to buy their girlfriend a ring, to diversify their portfolio so they're not 90% Bitcoin, right? And so we see these kind of step function moves, and then we'll see a long period of consolidation. And what happens there? You're turning over, old guys selling, new guys buying, and you're waiting for the new narrative to arrive. That brings the next wave of money in. And I think we're in one of those periods right now.
When we look beyond Bitcoin too, obviously there's a lot of enthusiasm in DeFi and some other chains. I know you guys have invested in a lot of very cool projects. Terra is one that we've discussed too before. Yeah. I mean, how important is that? Maybe, I don't want to say it's stealing the attention away from Bitcoin, but maybe the enthusiasm there for what the future looks like in attracting capital.
Listen, and one of the way markets work is when energy pushes them up, supply responses happen. What happened in 2017 is everyone thought everything was Bitcoin. Litecoin was the poor man's Bitcoin, right? Ethereum was the better Bitcoin. Floyd Mayweather coin was the boxing Bitcoin. And so you had this giant supply response which collapsed prices. This time around, we've learned some, but not enough, right? You can differentiate the type coins, right? There's store of value coins. I'd put Bitcoin in that thing, but I'd also put Litecoin and Dogecoin. And I think those things pull away from Bitcoin.
That's just a piece there of our discussion with Galaxy Digital CEO Mike Novogratz. You can catch more here on yahoofinance.com. But Akiko, I mean, when we're talking about his company, of course, one of those names out there with an active Bitcoin ETF application, now more than 10, that the SEC is taking a look at. And he pointed out that could be a big catalyst for more institutional money coming in, or just average, older investors, the way that they operate. And that's the big on-ramp when it comes to crypto. We talk a lot about some of these more fringe projects out there that might catch some attention for kind of their insane returns in the short term, but overall step back and look at this. And he's really pointing to Bitcoin being the on-ramp that could be changed pretty significantly if one of those ETF applications gets approved.
It's a big if, though, and something that, we've talked about before, because sure, it's a big on-ramp, but the SEC has kind of held up those applications. Did he give you a sense of what kind of timeline he's looking at right now?
He seems, he has a close relationship with Gary Gensler at the SEC, and he's talked a lot about the way that obviously Canada approved theirs. Puts a lot of pressure on regulators down here in the U.S. to catch up in a way, and maybe they want to use this interim period as leverage to maybe press some of the things they don't like in the crypto space. And he was pretty frank about the fact that regulations aren't necessarily ones to be feared here, and we've seen that kind of before. Once you lay the groundwork, a lot of good work and a lot of money can get comfortable with the idea of investing in there. They don't necessarily want a completely unregulated industry here, and a lot of the companies operating don't want that either. So he was pretty supportive of the way that he believes Gary Gensler at the SEC is going to do this and do it right. Not necessarily a timeline there, as everyone else has just been waiting. There is the sentiment, though, down there, Akiko, and I got this from a few people I spoke to, that it's not an if, but when the SEC wants to do this. And I guess we'll see how long it takes, but definitely something that would give him the comfort here to say we're back on the upswing. And until then, I suppose we don't necessarily know, and no one really wanted to say where Bitcoin prices were going to be going in the short term.
It's interesting how he answered the ESG question as well. Zack, I imagine you had a lot of those conversations down in Miami, but he seemed to sort of brush aside the concerns that have been raised, or I'm not sure if that was the way he was answering it. But when you look at somebody like Kevin OLeary, who said, look, here's the timeline that we're looking at where things could get resolved, whether in fact it is about addressing the sustainability concerns. It seems like that's likely to be a big catalyst for Bitcoin. But the reality is we don't really know how that's even defined right now. And that's not just a Bitcoin issue, but that's really just overall ESG. There is really no guideline in place.
Yeah, and it's hard to really address a problem before people can agree on how you define the problem, right? And that's kind of the issue. It's, I think, right now more of kind of an optics thing rather than an actual how do we fix this thing? Just because of the way, to your point, it's very difficult to get everyone to agree to any of those things. And it's the same when we talk about climate change in general and getting people to agree to emission standards and things like that. So, it's a very complicated issue, but when you think about where it's going right now, as I was leaving the conference, there were Venezuelan bolivars on the ground. And my Uber driver, I asked him, I was like, hey, how much is this worth now? And we were laughing. At least he was, because he's here now. But I think it was a good reminder. I don't know who planted those at the conference, but we always overlook, and this was Mike Novogratz's point too, we kind of overlook being here in the US, the store of value aspect of Bitcoin that has held up better than some of these other currencies out there around the globe. Not to be overlooked when it comes to what it's been trying to solve kind of since the get-go here. But much more from him if you want to watch the full interview here, coming out shortly on yahoofinance.com. But very interesting down there to wrap up our coverage in Bitcoin 2021 in Miami.
Apple kicked off its global annual developers conference today in Cupertino, California. Of course, this was a virtual event, and they released a ton of new features and technologies. Among them, Apple is bringing a new privacy dashboard to its latest software dubbed iOS 15 to make it easier to see which apps are collecting data from you and when. Take a listen.
It ensures that the traffic leaving your device is encrypted, so no one can intercept and read it. Then all of your requests are sent through two separate internet relays. It's designed so that no one, including Apple, can see both who you are and what sites you're visiting. And it does all this without compromising performance.
All right, here to talk more about the news coming out of Apple and its developers conference today is Santosh Rayo. He is head of research at Manhattan Venture Partners, and he follows Apple closely. Santosh, it's been a while. Great to see you here.
Great to see you. Good afternoon.
Yeah, good afternoon. Busy day for Apple, and I'm just wondering, when there were a lot of announcements made, but is anything in particular from where you stand, anything in particular popping out to you?
No, I think not so far. I think it was as expected. We expected cool features, upgrades to all their operating systems. I like the drag feature between the Macs and the iPads. So all those are cool features. The iWatch has some upgrades, all that. I think the big thing was about the privacy. They value their privacy. I think they're giving us something new there. So other than that, I think it's essentially in line with what we were expecting. Let's see down the road. I need to see more and read more and watch more. But at this point, the first take is that it's in line, cool features as usual, true to form. Apple does that very well. But the bigger issue, I think, right now is usually this is a pep rally, and Apple right now has to do more than just give a pep rally. It has to address certain concerns in the face of legal overhang with the Epic battle and a few other things. So I think that they have to manage the pep rally versus addressing some concerns. So that's what we need to see.
Okay, I want to talk more about, how some app developers may not be too pleased with Apple at the moment. But I want to talk about some more of the announcements they made today. This was an interesting one. Apple announced that FaceTime is going to be available for web users. So that means people outside the Apple ecosystem can get on a FaceTime call. So people who have Android, Windows PCs will be able to do that. Admittedly, this would have been, I guess, a little better if it were released during the depths of the pandemic when so many more people were going virtual. But what do you think about that move? And is it going to have, do you think, a material impact on Apple's bottom line?
No, I don't think so. I think on the face of it, this is good. It's good optics as well. I think the big issue is that walled garden and how people are shutting down. There's a question of monopoly, anti-competitive, and all that thing. To the extent it can allow to go beyond the Apple garden, I think that's good. It's good for Apple. I'm sure good in the long term for the bottom line. It's slightly different from what Apple did in the past, but that's good. That's needed. They need to move away from that. So there's a lot of issues. It's in the crosshairs of regulators and antitrust guys here and in Europe and everywhere. So all these small incremental steps, I think, are net positive in terms of removing any doubts about the value of Apple.
We know that Apple has been under intense pressure when it comes to people's privacy. What are the apps they're using, collecting on them? Do you think that today's announcement goes far enough? Or, for many companies, a lot of this is lip service. They're saying what they think the public wants to hear with regards to privacy, but it doesn't really have any teeth. What's your take on what Apple announced?
Yeah, I think on the face of it, my first take, I need to read the fine print there, but I think it just looks like a small step forward, meeting people's concerns. But I'm sure they're not just giving away everything. So we'll wait and see. But I think this is definitely an incremental positive. But we'll see how far they'll go in that and how much the people will be happy with that. But at this point, definitely they needed to do something about it. They need to take away the spotlight on them about how they just manage everything, dominate everything, keep away competition, and it's a walled garden, and how Facebook has concerns about it. And then they have the take rate, which is a big elephant in the room. They need to address that as well. So there are a lot of issues out there. All these small steps, I think, kind of chip away at the big concerns that people have against Apple.
All right, Santosh Rayo, Head of Research at Manhattan Venture Partners. Thanks for being with us.
All right, one of the coolest stories of the last month was news that United Airlines had entered into contract to buy at least 15 supersonic jets. For someone who was alive in the 70s and 80s and actually saw the Concorde land at Miami International Airport, this was big news. Let's bring in the founder and CEO of the company that's going to build this aircraft. Blake Scholl is Boom Supersonic CEO. Good to have you here. I'm a little disappointed that I got to wait till 2029 to fly on this plane, but top speed, as you anticipated, will be Mach 1.7. Do you think you'll be able to deliver on time?
Absolutely. One of the things that makes Boom a really special company is we have already built and rolled out history's first independently developed supersonic jet, the XB-1. That's our prototype for the Overture airliner. It rolled out last fall, and it's going to be in the air in just a matter of months. And with that aircraft taking really the design for Overture off the table, proving that it works in a real airplane, we are excited to be delivering Overture to passengers this decade.
And Blake, speaking of this, I know it's not only through work. I was having a lot of these conversations. Many people that I didn't think would take notice of an announcement like this have been talking about it over the last week or so. Any idea just of how much people will be willing to pay to ride one of these jets? Because it seems like there certainly is a lot of excitement out there for it.
Well, we believe that a world in which more people can go more places more often is a better world for us to live in, a better world for our children to grow up in. And if you say, COVID aside, why don't people travel? Well, it's because flights take too long. They cost too much money. They're too inconvenient, and we worry about the sustainability. So we want to build a future in which flights are faster, more affordable, more convenient, more sustainable. And with Overture, there's a 75% reduction in cost versus Concorde, designed half a century ago. So we're looking to bring down the prices of high speed so more people can benefit from this.
That's the key, and I'm glad you brought that up because Concorde was never a break-even venture for Air France or British Airways. So is the fuel, for instance, you're going to use sustainable carbon neutral fuels. Are these already in use? Because this plane is expected to test fly the XB1 the end of this year or early next year, right?
Yeah, that's right. These fuels exist. In fact, we've already run XB1's engines on one of the highest blends of alternative fuels ever used. And we actually saw greater performance on alt fuels versus traditional jet fuel. And so these fuels today, they're used on other aircraft up to about 50%. And Overture is the first airliner designed from the ground up to be compatible on 100% sustainable aviation fuel. And what that means is supersonic flight is going to be able to be completely carbon neutral. And one of the things we're especially proud of with our announcement with United last week is that they're actually going to do it. They're going to run Overture carbon neutral on sustainable aviation fuel. So that means that the airplane that you most want to be on from a speed and comfort and convenience perspective is also the one that's the best for the planet. And that's really, really exciting.
But here was the other issue with the Concorde. There was opposition to allowing it to land at airports in the United States because of the sonic boom. Do you see that issue ever coming back, that people, not in my backyard, would put a red flag up to stop this?
Well, we have to remember that Concorde was designed, in the 1960s with slide rules and drafting paper, and it used converted military engines that were super loud. And today we've got huge advancements in airplane technology. For example, Overture runs with modern, quiet, efficient engines that we're building together with Rolls-Royce. And what that means is around an airport, this isn't going to be any louder than today's latest generation subsonic aircraft. So this is something that I think, airport communities around the world are going to be very excited to have because there's no net new increase in noise and an incredible capability to get around the planet faster.
So Blake, you have this deal with United. Are you in talks with any other legacy airliners about a similar type deal anytime soon?
Well, this is something that appeals to international airlines, most valuable passengers. It's an incredible new capability. It's the first real speed up in air travel that we've had since the 1950s and 60s in a mainstream way. And ultimately, this is something that every international airline is going to need to be competitive. So lots of airlines around the planet are interested in supersonic.
A lot of us are rooting for you. I know you got the United deal, Japan Airways Airlines deal, but I got to ask you, Virgin Galactic, they're promising with their spacecraft right now, but what they're really developing is a craft that would take you from New York to Tokyo in 3 hours. That's a lot faster. Do you worry they might beat you?
Not really. If you look at the technology here, we have chosen the speeds that we have because that operates within technologies that are proven safe, reliable, and efficient. So we want to get supersonic flight into the hands of as many people as possible, quickly as possible, and then we're going to keep iterating. Today we're talking about Overture 1, but there's going to be Overture 2, Overture 3. They're going to get progressively faster, more affordable, available to more people in more places.
We are wishing you the best and look forward to having you come back on the day you do that test flight with XB1. We want it to hit supersonic speed. So, Blake Scholl, Boom Supersonic CEO, all the best.
Let's talk more broadly about what this could mean for U.S. companies and, of course, the broader economy. For that, we want to bring in Kevin Hassett. He is the former chairman of the Council of Economic Advisors under President Trump. He's also a distinguished visiting fellow at the Hoover Institution. Mr. Hassett, it's great to have you here on Yahoo Finance. Let's just start with what Treasury Secretary Janet Yellen was saying about this. She was saying that this global tax reform will help the global economy thrive. She went on to say over the weekend, she called it significant. She called it unprecedented. What do you think of this idea?
Well, first, I think the headline, which matters a lot for your viewers who care about the macroeconomy and markets, is that this isn't going to happen. Okay, it's just not going to happen. The G7 has no authority over this. That for the EU to do something, then they basically need about unanimity, and there's no way the Irish will ever sign on to the thing. And then, for the U.S., I think that there's a big question whether it would pass too, because if you analyze it, then basically what we're doing is we're giving foreign countries basically a hunting license to get revenue from U.S. firms that they couldn't get before, because basically in order to justify putting taxes on a company, the company had to operate in your country. And so we're giving that up, which is giving a whole bunch of revenue to foreign countries for, basically no good reason. You could argue that maybe they're going to get some extra revenue if all this becomes law in the U.S. From the higher global minimum tax because of reduced transfer pricing. But even if that's true, what's going to happen is companies are just going to invert. They're going to move their headquarters to Ireland or some other country that isn't doing this and avoid the U.S. tax. So this is a chase jobs overseas, chase business overseas endeavor. There's been a bipartisan agreement in the past not to basically let Europeans, hold American firms hostage and collect revenue from them in this way. And it's really, I think, not in the American interest to pursue the policy that the Biden administration is right now.
And it's important for us to listen to someone like you. But I got to ask you, it's a two-part question. What good is being among the most powerful nations economically in the world if you can't do something that you think is in your best interest? I mean, you brought up Ireland, 12.5% tax, and they would never go along with this. So what can the United States do?
Right. Well, this is really well established in the economic literature that if you want to sort of put politics aside and have an optimal tax system, then basically you would have something like a progressive value-added tax. So you would forget it for low-income people, maybe have a higher rate for rich people, but you wouldn't have a corporate tax at all. And so, like, a sign of either the partisanship or the economic illiteracy of the Biden team is that they're saying they have to stop the race to the bottom. But actually, the optimal corporate tax is zero. And so what's going on is there's a race to the top. There's a race to the optimal. Because what countries are seeing is that if they have, more revenue from value-added taxes, then they grow faster and they outcompete countries that don't. And that process over the last 20, 30 years has moved a huge share of the tax base for European countries to the value-added tax because it's the most efficient tax. And so there's a tax competition going on for sure. And the most efficient countries are winning for sure. But it's a race to the top, not to the bottom, and we shouldn't stop it. It's basically not in our interest. So what the Biden administration is saying is we need to have this really stupid tax. We've got to go back to being the highest corporate tax on earth, and we know that's really going to kill jobs in the U.S. But don't worry, we're going to make everybody else be stupid too. And now the people who go to a G7 meeting and pretend they're going to be stupid, but when push comes to shove, they're not going to engage in the activity that the Bidens are asking them to do. The Biden administration is asking them to do. It's just not going to happen.
So, Kevin, you don't think that there's any chance then that something like this will then get implemented?
If it does, right, then you're looking at a really complicated process where lots of countries have to pass this thing. And then, they're talking about having, a hammer that they could whack countries over the head with if they don't enact a global minimum tax. But those hammers would violate tax treaties that have been negotiated with all those countries. And so we'd have to renegotiate tax treaties. And get those passed into law. It's a 10-year process to do what they're talking about, but it's a 10-year march to a really stupid place, to a global high tax on capital income that reduces labor productivity and wages, just so that the Biden administration can sort of feel virtuous about soaking the rich. There are ways to soak the rich that are completely economically sensible, that don't cause a lot of economic harm, like having a progressive value-added tax. But this is not it. This is just posturing. It's not policy.
I was going to ask you, what are those ways to soak the rich? And you just brought up the value-added tax. Let's turn our attention to that, because I had asked you at the beginning, what can the United States do? What makes you think if the Biden administration couldn't get this through with the current Congress, why would a VAT tax go through?
Oh, I'm not saying they could get the value-added tax through. I'm saying that as an economist, my job is to analyze the economic impact of policy proposals. And the way to think about how out to lunch this proposal is, if you combine it with their corporate rate proposal, that you guys might recall, we used to talk about this when I was in the White House, that the Tax Cuts and Jobs Act cut the corporate rate to 21%. but it broadened the base a lot at the same time. And so that the total net cost of the corporate reduction over 10 years was about $300 billion because there was all this extra revenue from international tax and then a lower rate. It was base broadening, rate reduction. It's what tax reform is. So what the Biden administration is proposing is that they lift the corporate tax relative to today's law by $2 trillion over 10 years. And so if you want to think about it, that means that there's about a $1.7 trillion tax hike relative to the tax code that we inherited from President Obama. And now, when we started talking about the corporate tax reform back in 2017, we reminded everybody that we were the least attractive tax place on earth, and that's why wages were stagnant and jobs were being shipped overseas and so on. And so the really radical and irresponsible proposal from Biden and Secretary Yellen is to have a humongous tax increase relative to what was the highest, most punitive tax on earth when President Trump took office. And so it's just not something that I think has got a chance in a million years of becoming law, because there are a lot of sensible people in the Democratic Party and, of course, the Republican Party that recognize that being the least attractive tax place on earth is not good. Now, if you look at all the people that are moving from New York to Florida and stuff, like even within the U.S., you can see that these high tax rates have a big effect. And what Biden's proposing to do is to lift the tax so high that everybody would want to flee, and then to encourage the places they might flee to lift their taxes too. But the benefit from not doing that is going to be so high for those other countries, because they're going to get the headquarters from our top firms, that they're going to pretend that they want to do it, but then they're not going to do it.
Let's talk a little bit more about jobs here in the U.S., because we just got the May jobs report out on Friday. 559,000 jobs added, a step in the right direction, yet we still have millions more to go to get to where we were pre-pandemic. We know we have a number of states ending the enhanced unemployment benefits. From your perspective, though, how big of a help will that be in order of correcting this supply versus demand imbalance that we seem to have in the labor market, and what else needs to be done?
Right. Well, the supply-demand imbalance is really the big story right now. And of course, the effect of having surging demand without surging supply is you get inflation. And if you look at the sort of 12-month inflation rate in the latest CPI report, it's all the way up to around 9%. Over the first almost half of the year, inflation is looking at posting in around 6%, while wage growth is in the 3s. And so, basically ordinary folks are seeing their real wages decline because inflation is going up faster than their wages, and that's because supply isn't keeping up with demand. Now, supply isn't keeping up with demand, I think, for two big reasons. On the sort of capital side, we've got President Biden and his team sort of saying all this kooky stuff about how, it's really going to be good for the global economy to raise taxes, humongously relative to the highest tax on earth when President Trump took office, which doesn't make sense. But if you're a corporation, would you really want to have a big capital expansion right now, given that they're threatening you with these punitive tax rates? Well, probably not. And so we'll expect to see an effect of that on capital spending. So we're not getting supply from there. And on labor supply, we are still paying a lot of folks not to work. I don't think that was a big effect last year because they couldn't work because of COVID. But now that we're turning the lights back on again, it's starting to be a big effect.
Kevin?
And then you might say, well, the red states aren't doing that, but the blue states are. So the red states have decided not to plus up unemployment insurance, and that's true. But if you look at the places where, in order to have a global economy skyrocket, we need to get a lot of workers back in blue states, because their economies have fallen far, far behind the red state economies, and that's where you got to create jobs. And so I think that basically they're killing supply and they're jacking up demand with this massive stimulus, and so you're going to be seeing inflation.
Kevin, you're one of the rare guests that I can't interrupt. I have to ask you real quick, because the producer's saying.
I don't read.
You are, by the way, a headline machine, because I don't want to interrupt you, but I got to ask you, September 6th, when the stimulus payments expire, what do you think? Do you have a prediction as to what happens with this labor market?
Can I ask you a quiz, which will probably not embarrass you in front of all of your fans?
Go and embarrass me. I put in my mouth every day.
But do you remember what year the expanded unemployment insurance benefit expired after the financial crisis under President Obama?
I think it was 2015, but the producer was talking to me as you were asking the question.
2014. It was 2014. And so the point is that what's likely to happen is that come September, then people are going to say, those heartless Republicans want to end the expanded benefits for the poor unemployed folks. And then they're going to basically jam through an extension for another year or so. And so I think you're probably looking at a year or two of expanded benefits before it's given up.
Kevin Hassett, always great to speak with you. Thanks so much for taking the time to join us here today. Former chairman of the Council of Economic Advisors under President Trump. We hope to have you back.